This is our year-end closing webinar, and we will talk about the payroll processes and the 1099 information. As always, the mission at Ingevity is to improve the life and success of our customers and partners by providing exceptional business application experiences that simplify, inform, and delight. And so hopefully this webinar will inform you and maybe simplify some steps. And as I get rolling, you also have the ability in your bar to raise your hand. Can one or two of you raise your hand and let me know you can hear me? Great, thanks. Okay, with that, we will forward on. This is the year-end update information. So there's kind of two pieces. There's a year-end update and a payroll year-end. And we're going to talk about both of those. The year-end update is provided by Microsoft every year. It includes all the payroll updates, plus it includes the prior version that they released back in October. So if you do the year-end update, you're getting all the payroll information plus the new features that were released with their annual release in October. Is it required? No. In most situations, the answer is no. There are a few cases where you do need it. Obviously, if you're running payroll, you should be putting in the year-end update every year because you need to make sure you're current on all your payroll information. And it is recommended that you upgrade. We say at least every other year because otherwise, if you're not upgrading, then number one, you're missing out on the new features. But number two, when you do get ready to upgrade, you have to hop through most of these upgrades anyhow. So you still have to do the process of running the upgrade. So you're paying for the time to run those processes. However, you didn't get all the benefits in the interim. So if you upgrade at least every other year, you're staying current, you're keeping your upgrade hops down to just one upgrade motion, and you're keeping up to date on all the current updates and security patches. So with that in mind, the year-end update is equivalent to a service pack. So it does run against all companies and databases, so plan enough time. If you want to estimate, you can usually do a pretty good estimate by saying 30 to 45 minutes per company database you have. It depends a lot on your server and how big your company databases are, but that's a pretty good average. As with anything major like this in GP, before you do it, you want to make a full backup of your company and your system databases. That's going to be SQL backups to a local server. If you have an IT team who's making like image level backups or server level backups, those are fabulous and they can be used. But when you're dealing with something like a year-end update where it could go wrong, you want to have a local backup, a local SQL backup, just because you can get to it faster and restore faster. And by going wrong, for example, I had someone who was closing the general ledger and someone in accounts payable posted a huge batch of AP checks in the middle of the closing and it just kind of blew everything up. So we would, at that point in time, stop the processing on both sides, restore a backup, and let them post their AP transactions before we start the GL year-end closing. If you are an on-premise installation of GP, then the update also gets installed on all your workstations. And if you are going to install the year-end update, you should do it before you close any of the modules in GP just to make sure you have the latest and greatest bits and pieces for each of the modules. For 2025, there actually are not a lot of changes, which is great considering that we had the one big beautiful bill. Some of that stuff will come in the future and for 2026, but for 2025, nothing needs to be done for that front. So no IRS changes to the payables 1099 forms, the W-2 or W-3 process, forms, the ACA forms. So the no form changes, which is great. No updates related to the Payroll Secure Act and the W-2 overtime premium. No changes to electronic filing. There is a change for fixed asset luxury auto depreciation. So if you are using that luxury auto in your fixed assets, you do need this year-end update. And then lastly on this page, we've got a link out there to all of the year-end information. So Microsoft publishes a blog every year that updates all, that puts out the latest and greatest year-end information, and that's the link to that blog. If you need that separately, let me know. Otherwise, you can actually search Dynamics GP 2025 year end, and then you'll find this blog really quickly and easily. All right. So any questions on any of that before we get rolling through the steps? If there are, just chat them out there. If not, we're going to go ahead and get rolling. All right, here is the sequence to close things. Sales order, then purchase order, then inventory, receivables management, payables management, fixed assets, analytical accounting, and general ledger. Receivables and payables management have asterisks beside them because you can close those for fiscal year and a calendar year, and we'll talk about that here in just a little bit. All right, so for sales order processing, there's not actually a process to run. Like when you go to the GL and you click close the year, there's not one for sales order, but it's always a good idea at the end of the year to kind of clean things up. Make sure you've got all your sales transactions entered, and then reconcile your sales documents and remove the completed documents. So people miss the last piece of that, the remove completed documents, because in GP, it's actually called paid transaction removal, which sounds like you're deleting information out of your GP, but what it's actually doing is it's moving your closed sales transactions from the open tables to the history tables. The benefit there is that all of your other processing, your current live processing will run faster if the open tables do not contain all the history for the life of your documents. If you have never done that process, you should definitely do it in small bits. You should not go in, if you've been running GP for 10 years and you've never run the paid transaction removal, you don't want to go run all 10 years of that at once because it could run for a very long time. So you'd want to either do that in a test company first or do it year by year. So like go back and remove paid transactions for 2007, then do 2008, et cetera, move your way forward. If you're going to reconcile your sales documents, that process itself can take a little while. So just make sure that if you've never done it, again, leave yourself some time. It might be something you want to kick off on a Saturday morning and see how long it runs, just so that you know for the future how much to budget for it. And anytime you're going to run a reconcile, you should make a SQL backup first. Again, this would be not your normal backup. This would be a one-off backup in case something happened and you wanted to restore quickly. Purchase order is very similar. There's not actually a button to push that says close the year, but it's the same type thing. You want to enter all your purchase order transactions. You can run the received not invoiced report so that you can compare that. That's just a year in tie out to make sure that what you have received but not been invoiced for matches your accrued purchase account. So just a reconciliation. The reconcile purchase orders is a process you run in GP. Again, it could take a while to run depending on how many purchase orders you push through the system. So you may want to run it in test company first or run it on a weekend first to get a feel for how long it takes. And the same thing with the remove completed purchase orders like we talked about in the sales order side. It moves fully paid or fully received purchase orders into the history tables. And again, you're gonna hear this a million times today, but make a backup. And as we go through this, you're going to hear make a backup a bunch of times. It is possible to make a bazillion backups while you're doing this, and it really depends on your timing. So if I'm going to go in on a Saturday morning and I'm going to reconcile and remove sales order documents, and I'm going to reconcile and remove purchase order documents, and I'm going to close inventory, I can get away with making one backup before I do all three of those processes. Because in the process, if something goes wrong, I can go back. That said, if I run the sales order process reconciliation and it takes 7 hours, it's probably worth stopping and making a backup there before I do the purchase order, because if something went wrong with the purchase order processes for reconciliation, I don't want to go all the way back to the backup before the sales order and have to redo the sales order reconcile and then redo the purchase order. So I hope that makes sense kind of in the scheme of when to make backups. If it's a big process and it took 7 hours, when it finishes, make another backup before you start the next process that could take 7 hours, okay? Again, the idea is if something goes wrong, we want to quickly be able to restore the backup and get back to where we were and start over again. Okay, inventory. When do you reconcile inventory? Inventory actually does have a button to click in GP to close it. We'll see that on the next screen. So you're going to close it at the end of your fiscal year before you enter any SOP and POP and inventory transactions that would affect inventory quantities. Excuse me. Now, we all know in a perfect world, as an ex-auditor, this would actually happen in one day. I would go in and do all of these things in 1 day or 2 days, and I would keep everybody out of the system, and nobody would do any processing while I did this. However, in real world, we know that that's not always possible. So when we say run your fiscal year in before you enter SOP and POP and inventory transactions that would affect your inventory quantities, it's a best practice to see if you can run it all before you do any new transactions. But obviously, if you have to put new transactions in, you have to put new transactions in, and that's just life. Okay, so what does it do? It updates your quantities, your cost, it updates your beginning quantity information, your on-hand quantities, it zeroes out some of the quantities sold fields in the item quantity maintenance, and it gives you the option to remove discontinued items, remove sold purchase receipts, remove sold lot attributes, and update the item standard cost. So that last bullet point are all the options that are in the actual closing window. So when you pull up the window, you can check to do all of those things. Discontinued items, you have to have gone in and flagged the items as discontinued in GP. And if so, then it'll remove them out. Sold purchase receipts is just kind of a cleanup to get rid of some history, and so is sold lot attributes. Okay, so as a prerequisite, reconcile SOP and POP and inventory. Again, those are not hard required, but they are highly recommended. Closing your SOP and POP, as we just talked about, is not actually pushing a button, it's just making sure everything's clean and reconciled. Complete your inventory count and post the adjustments, if at all possible. We love to do that right before closing the year. Print these reports. These are just so that you've got kind of a good historical status of your inventory at this moment in time. Make a backup and then go into inventory routines, year-end close, and actually close the year. When you are doing any of these closing processes that actually involve clicking a year-end close, you want to make sure that there is nobody in your system in this company. If you have multiple companies, they can be in another company, but you need to make sure they're not in this company. And because people tend to forget that and toggle between companies, it's best just to tell everyone to stay out of GP while you're doing it. Like I said earlier, you do not want somebody in trying to post 5 or 6 sales order transactions while you're in the middle of closing the year end, because it's trying to look at quantities and you're going to be adding or changing or subtracting quantities while it's trying to do the math, and you're going to really throw your numbers out of whack. Okay. All right, any questions on inventory? Raise a hand or throw it out in the chat boxes. Okay. Once inventory is done, we're going to move to receivables. Again, you can do this at the end of a calendar year, fiscal year, either or both. So you can do, if you've got a fiscal year that ends June 30th, you can do a year-end closing then. If you want to wait and do it at the calendar year, you're going to just choose both boxes if you do it at the calendar year. So the reason is that next bullet, what does it do? The calendar year moves the calendar year to date finance charges to the last year field in the customer finance. So you've got several inquiries in GP where you have a life to date number, a year to date number, and a last year to date number. And so the closing process is really updating those buckets. So it's taking everything that is in your year to date bucket and moving it over to the life to date bucket, and everything that is in, or that's in your, think about what that is. There's a current bucket, there's 3 buckets there. Anyhow, it's just moving all the data over one bucket and zeroing out the current year information to get you a new total, okay? The fiscal moves all the amounts except for the finance charge amounts. So everything else, so that's why you would run the fiscal close as opposed to the calendar year end close. Now, one caveat, and this is true for both receivables and payables, is that they move what's in those buckets at the time you run the process. So if you go in and look at an inquiry and your current bucket says $5 million, your last year is 0, and your year to date is 0, and your life to date is 0, then you've probably never run the year end closing and everything's been accumulating in the current bucket all the time you've been processing. When you actually do run a close, it's going to move that $5 million over to the last year to date amount and the life to date amount. It moves what's in that bucket at the time you run it, okay? The reason I tell you that is because you're never really going to get a totally clean cutoff. If I go in and shut everybody out of the system at July the 31st, I mean, at December 31st, and we close this system out and we start processing January transactions, you know as good as I do that January the 3rd, we're going to get an invoice that's dated December the 28th. And then you're going to have to decide whether to enter that with a December 28th invoice date or change the posting date or how you want that to flow through. But you've already zeroed those buckets and you now have technically what's a December transaction going in January, okay? So you're never gonna get a totally clean cutoff. That said, it doesn't hurt to run this process. It does tend to keep those numbers more accurate. They're never gonna be perfect, but they make the inquiries a little bit better. For payables, they've also added, and we'll see this in a bit, some functionality so that when you can look into the default windows, you can say, show me the current year transaction based on date. So it'll actually do inquiries based on dates, not based on buckets. I hope that all makes sense. Excuse me. So when you're closing your year, you're going to make a backup. You're going to, post all the transactions you can post that can go through that need to be in the year. You're going to make a backup, and then you're going to go to sales routines, year-end close, and choose whether you're doing a fiscal or calendar year, or I think you can do fiscal, calendar, or both. Okay. Moving on to payables, and if anybody has any questions about receivables, again, feel free to chat them out there. Payables, very similar to receivables. So you're going to do it at the end of a calendar or fiscal year. Obviously, at the end of the calendar year, you're taking 1099s into consideration. So the calendar year close is moving the 1099 amounts. The fiscal year is transferring all the other amounts from that same three buckets, current to last year to date and life to date. Same as with receivables, it moves whatever in those buckets the day that you move them. So whatever's there, the time you hit go is what's moving from one bucket to the next. You're going to make a backup. You're going to go to purchasing routines, year-end close, and you're going to choose whether you're going to do a fiscal or calendar or both. Okay. All right. Fixed assets. So after all of your PO and AP transactions have been posted, any additions, retirements, and transfers have been completed. The reason we put that in there is because it is if you are linking your AP to your fixed assets. If you do not have AP and purchase order linked to fixed assets, then that first line probably doesn't make any sense to you and you can just ignore it. But with that, you need to make sure you get your additions, retirements, transfers, all of those completed, and that you have run depreciation through the last day of the current year. Notice that that is bold. Once you close fixed assets, you cannot go back and run depreciation for the closed year. So you need to make sure you get all of your I's dotted and T's crossed before you close fixed assets. So what does it do? In the general area of each fixed asset, the year-to-date maintenance amount is cleared out and the quantity is copied to a beginning quantity field. In the book, your year-to-date depreciation is cleared over to the life-to-date. Your cost basis is copied to the beginning year cost. Your life-to-date depreciation is copied to the begin reserve, and your salvage value is copied to the begin salvage value. So it's just, again, moving those balances forward. Prerequisites, you want to apply the year-end update if you utilize the luxury auto. If you don't utilize your luxury auto, you can go ahead and do your fixed asset closing without the year-end update. Again, as we say, it's recommended you do the year-end update at least every other year. But if you're not using luxury auto and you did an upgrade last year, you could probably skip this year, unless you're using payroll. Again, make sure your depreciation is posted through the last day of the year. Make sure that all of those GL entries, because you have to post separately in fixed assets, you have to go in and choose which fixed asset transactions and entries you're going to post from fixed asset to GL. So you want to make sure that all those are pushed over there. A lot of times I will go back at this point in time. It's pretty standard practice when you get ready to do the post to GL in fixed assets. You go in and you put in a period range. So I'm just going to go in and put in only December. When I get to year end, I usually put in January through December just to see if any odd entries showed up that I didn't know were there. Maybe I Maybe I sold off an asset and didn't realize it had booked an entry for a prior period. At that point in time, I would just have to decide whether that entry had been made manually in the GL already, or whether I wanted to push it over to the general ledger and maybe change the date on it, or how I wanted to handle that. But I always do like to go in and put in January through December to see if there's anything I missed. Reconcile your fixed assets to the general ledger. Of course, there are several reports that make that really easy and handy to do. Print any reports that you want for supporting documentation, make a backup, and then you're going to go to financial fixed assets routines, year-end closing. I will say the year-end closing report for fixed assets is one of the few reports in GP that you can't reprint later. So if it's a report that you need to utilize, make sure you print it and keep either a PDF of it or a hard copy of it, because you can't reprint that one later. Okay? I'm going through this pretty fast, but you guys stop me if you have questions. All right, analytical accounting. If you use analytical accounting, there's not actually a year-end closing process. It closes along with the general ledger, but there are maintenance scripts that you should run beforehand to make sure that your GL and your analytical accounting is in sync. So there's an article, if you search for Dynamics GP KB960356, you'll find the article on those scripts. And as always, you can ping support@ingevity.com for help with this if you need help. You want to make sure that you've included your dimensions in the in the GL year end, and there's two options for that. So under Administration Setup Company Analytical Accounting, you want to check the options there. And in Financial Cards Analytical Transaction Dimensions, you want to check the options there and make sure that those are all set to be included in the GL year end. All right. For general ledger, after all the other modules have been closed, you can close your general ledger. One thing that a lot of people do is they don't close their GL until they've been through an audit in March or April. And the downfall of that is your beginning balances for your financial statements are created when you close the GL year end. So just note that you can post entries to the last closed year in Great Plains. So if I go in at 12/31 of 2025 and I close the general ledger for 2025, I can still make entries for 2025. At that point in time, when I close the year for 2025, I can no longer make entries for 2024. So the only reason you would want to keep 2025 open is if you still had some kind of outstanding audit or reconciliation purpose issues for 2024. Because once I close 2025, I can no longer post back to 2024. Hopefully that makes sense. But there's a lot of benefit to going ahead and closing your years, because you still can go back and make those audit entries and they will roll forward for you properly, all by natural GP functionality. I see a question, will the recording of this be available to view later? I will have to check on that, Josh. That's up to our marketing team, and I'll see where they put it. They usually do put it out in a YouTube channel somewhere though, so I'll check on that and let you know. Okay, so the general ledger year-end closing process, what does it do? It closes all the profit and loss account balances into retained earnings. It rolls all the balance sheet accounts into the new year, and it marks the closed year as historical. I was going to say something. It'll come back to me in a minute. Okay, prerequisites. You want to review the posting types of all your general ledger accounts. Every single year do this, because if you actually have a profit and loss account that is set as a balance sheet in your chart of accounts, then it's obviously going to get a balance rolled forward and it's not going to roll to retained earnings. Vice versa, if you have a balance sheet account that got accidentally marked as a profit and loss account, it's going to roll to retained earnings and not have a balance for it. And there's two ways to fix it. You either have to unclose the year and then fix the account, reclose the year, or there are some scripts behind the scenes to run to fix those transactions. So it's just much easier. Go into SmartList, pull up all of your accounts, make sure you've extended the filter beyond 1,000 accounts so that you're getting all of your accounts, and then sort them and review them. You could do a query in SmartList where you say, show me all the accounts flagged as profit and loss accounts, and make sure that they actually are, and then show me all the accounts flagged as balance sheet and make sure they actually are as well. Make it a little bit smaller chunks to look at, but 100% do this because no matter how careful you think you are setting up your accounts, there's a good chance one of them got set up with the wrong type. So always, always, always go check the types. Also, it's not on here, but if you use unit accounts, in those unit accounts, there's a checkbox that says whether you want to close the GL year or not. So if I have, for example, a unit account that is a head count of people, I don't want that to zero out at the end of the year. I want to keep that head count. I want to know that at the end of the year, accounting had 10 people in it, and then those 10 people are still there at the beginning of the year. So I do not want to close that or zero that balance out. But if I am maybe doing a head count based on, if I have a unit account that is maybe based on the number of hotel rooms I think I'm going to sell in a given month, that I probably want to zero out and start again for the new year. So in your unit account setup window, there's a checkbox on each unit account to tell it whether to zero out during the year-end closing process or not. Make a backup, 100% have all users out of GP when you do this, and then run your year-end close routine. All right, any questions on any of that? Okay, 1099s. So just a quick review. You have several windows here. 1099s in and of themselves are based on your tax type setting in the options for each vendor. So you can review each of your vendors to make sure they are set up properly, and the tax ID is there. If they are set up as any kind of a tax type other than non-taxable, you need to have a tax ID in this top field so it can print on the forms. I think it was last year they added this DBA field that will actually pull into the 1099s. So before, if it was maybe Kenny Morris, DBA Morris Drywall, you had to kind of cannibalize the address ID to make sure that that showed up properly. But now you actually have a DBA field that you can use to print on 1099s. And you also now have a 1099 address. So if for some reason the 1099 should be sent to a different address, you can do that. So these are all vendor maintenance things to look at. Again, the easiest way to do it is to go into Smart List and pull up all the vendors where the tax type is not equal to not taxable. And then you can add these extra fields and make sure they're all set up as you need them. There is also, under transactions and purchasing, and edit 1099 information. So again, this is going to be by vendor. I can go in and see all the 1099 debit transactions, all of the debit transactions, and all of the credit transactions. So this one is going to be anything that got flagged as a 1099 will show up, and then all other transactions that are out there will show up with these other buttons, so you can see if maybe something didn't get flagged as a 1099 that should have, or maybe didn't get flagged with the tax type. So this is it's a visual way, a very manual way, but it's still a good window to go out and review those transactions. Another option is to go out and run the 1099 edit list. So we'll see that here in a minute. Make sure that you check your thresholds, because I think these are changing. I don't think they changed with 2025, but I think in 2026, they may be either bumping this threshold up or removing it. I can't remember what I heard, but I think they may be changing that threshold. And you as a company may have a policy that says we send a 1099 to all of our vendors that are set for 1099s regardless of how much money they got. So you can come in and set that yourself. So again, this is under payables management setup. Under the 1099 setup option, you can set the thresholds for each different type. Okay? All right. Updating 1099 information. So there is a utility for this. Purchasing utilities update 1099 information, and you can update, again, the vendor, the 1099 transactions, or the vendor and the 1099 transactions. So if you have vendors that were not set up to be 1099s and you want to set them up to be 1099s, you can do that. So I would set up the vendor, I would take the tax type that it's set to. So if it was set to non-taxable, and then I would say it needs to be a miscellaneous. Put in a range of vendors. You have multiple ranges you can select from here. You definitely don't want to do that for all vendors, right? You don't want to go in and accidentally mark all vendors as taxable. So if you're updating vendors, then you definitely want to put a range in there. once you've changed a vendor to be a 1099 vendor, then you would want to go in and do the transactions to make sure that all the transactions for that vendor get updated as 1099 transactions. You can also use just the transactions pieces of this if, say, maybe somebody set a vendor up initially and didn't have them set as a 1099 vendor, and then you changed them halfway through the year. This would kind of reconcile that and go back and set all their transactions to be 1099 transactions. So as a note, if you want to edit individual amounts, you can go to the Edit 1099 Transactions window, which we don't have a screenshot of, but it's under Cards, Edit 1099 Transactions. One thing to note, if you're going to use the Edit 1099 Transactions window, is you can go in and manually fill in 1099 amounts for a given vendor. You can just say, this vendor should get a 1099 for $1,200. Okay, you're just plugging in a dollar amount. If you ever run a reconcile in accounts payable, it will wipe those amounts out because it goes and looks at the actual transactions to see how the transactions were flagged, and it recalculates. So if the vendor is still marked as non-taxable, or you didn't run the transaction update here, you just marked the vendor as a 1099 vendor and then went in and plugged in specific amounts in the Edit 1099 Transactions window, when you reconcile, it's going to look at the transactions, it's going to wipe those amounts out. It's not necessarily a bad thing, just something to note. Okay, I think it was last year end when they added some extra drop downs. So in the Edit 1099 Transaction Entry window, you can now say by calendar year paid, which is great because as opposed to trying to see, all of this year or whatever, it actually is basing it based on when the invoices were paid off. So for those transactions where we had a December invoice and paid it January, that belongs in that January's 1099 year. So, and from there you can zoom. So from the 1099 inquiry, if you zoom back from the 1099 inquiry window, if you zoom back, it'll open this edit window and it'll be restricted automatically by the year you were looking at. And there's a report as well. So from within this window, you can print and get a report of those 1099 transactions. So again, for reconciliation purposes and making sure you're getting the right dollar amounts associated with the vendors for 1099s, they added that functionality for you. All right, here's our 1099 window. So purchasing routines, print 1099s. You can print them with lines now, so you can actually buy blank forms from the Office Depot or whatever it is, and print them with lines. From this window I mentioned earlier, if you click print in here, you'll get an edit list of all the vendors that show up for 1099. So instead of printing test forms, you can print an edit list and see who's on there, and then go back through the previous steps to either remove vendors or go find vendors that aren't there, etc. GP does not have the ability to electronically file 1099s, so we've given you a whole lot of options out here. If you need information on any of these, feel free to email support@Ingevity. I know we have a lot of customers who use this W2 Mate. It's really very straightforward. I think you print an edit list from the 1099 window, import it into W2 Mate, and it prints and files the W2s for you. I'm not sure what some of the other ones of these are, but they are ones that our team has used, or they wouldn't be out here. So if you need help figuring out your electronic filing for 1099s, just give us a shout and we can go into more detail on all of those options. Okay, payroll year end. If you do payroll in GP, you should plan on installing the year-end update every year. This year, the changes are minimal. So there's a 941 prep report issue that has been fixed. Employee with Medicare waiver payments, but no gross pay, the W-2 wasn't printing because it wouldn't print if box 1 was 0, so it wouldn't print your box 12 for you. So those two have been fixed. No form changes, which is great. That's usually a big issue. And you can install the 2026 payroll tax update without doing the GP year-end update, but again, they kind of go hand in hand and they're recommended. I want to step back to no form changes for just 1 second. From the standpoint of one of the things that that we do frequently when we do a GP health check. If you haven't heard of those, we have a free GP health check. You can email support and we'll get you set up for that. But one thing that we go look at is modified forms. So 10 years ago, if you needed your 1099 form to move up or down a little bit, you might go modify the form. If your user still has access to that modified form, you're actually using the form from 10 years ago. So you want to go in and make sure that you turn off security to any old modified forms and get rid of those old modified forms, because otherwise you're not using the form updates that Microsoft publishes every year. Okay, so with that, if you can close your year before you process your 2026 payrolls, that's the best option. And if you can, here's the steps to do that. Make sure you get your last payroll of 2025 in and the last payroll tax update of 2025, which is not the year-end update. There's a payroll tax update that's separate. So you want to get the 2025 one in first. Complete all your 2025 pay runs. Do your 941 reconciliations. Make sure they're all right. Tie it to your payroll summary. Make a backup. Close the payroll year-end and create the year-end wage file. And then you're going to verify all your W-2 information from your 941 reports, print your W-2s, your 1099-Rs, create any electronic files needed, and then install the 2026 payroll tax update before you do any 2026 payrolls. That's perfect world scenario. And most of you guys are pretty good about being able to do it in that order. If by chance you do have to do a 2026 payroll before you can get your 2025 payroll completed, like maybe you've got to get out a payroll for January, but you know the bosses are considering a bonus for 2025. So you got to kind of coordinate between the 2025 bonus and the first payroll of 2026, okay? You still want to make sure that you've got the most current payroll tax update for 2025. Complete as many of the pay runs for 2025 as you possibly can. Install the 2026 payroll update, run your 2026 pay, and then you're going to have to back out that 2026 payroll update. So you do that by manually importing the tx.cab file for the 2025 tax update, the one that you did in the first bullet point. You're going to keep that file and you got to put it back in there. And then you go through your normal payroll year-end processes. You're going to reconcile the 941 to the payroll summary, make a backup, close the payroll year-end, create the wage file, verify all the W-2 information, print all your forms, create any electronic files, and then you're going to reinstall that 2026 payroll tax update. So basically, you're putting in the 2026 tax rates for that first run in 2026, and then you're backing them out so that you can do your normal year-end closing process. Okay, editing W-2s. So you have two options here. If you've already run your year-end wage file and people are moving forward with payroll for 2026, you can manually update those W-2s in the W-2 windows. So the pros there is that the user don't have to get out, you don't have to make backups or install tax tables. The con is if anyone removes the year-end wage file and then tries to recreate it, you're going to have to make sure that whatever changes you made, you're either going to have to redo them, or when the year-end wage file is removed, create them in the system. So you're just going to have to keep track of what it is you did so you can redo it in case. The other option is you could just remove the year-end wage file, make all the changes properly within the system, and then recreate the year-end wage file. From a standpoint of an ex-auditor, option 2 is the way you want to go, because then you have records in your payroll system noting why you made the changes as opposed to just W-2 edits. Okay, so the pros there is it's the cleanest way and your detailed payroll ties out to the W-2. The cons is you have to get everybody out, make a backup, possibly reverse out tax tables, etc. Okay. All right. So GP does do electronic filing for W-2s. You have to have a user ID number assigned to you by the Social Security Administration to do that. So within the W-2 filing, you've got to go in and put in the submitter information. All this has to be populated or you won't be able to create the W-2 wage file. Okay, as far as new legislation, I mentioned the one big beautiful bill. There are no changes in the year-end update related to legislation passed in 2025. For payroll overtime premium, in 2025, you have option to send a letter or include the amounts in a separate W-2 box. And as always, Terry Healy with Microsoft has put out a blog on how to help track that. And then for the Secure 2.0 Act, again, Terry has another blog to help identify who this might impact and how to configure benefits for those individuals. So Microsoft hasn't put the code into the system, but they've got the workarounds and or the assistance, whatever you want to call that. All right, so as always, again, with Terry Healy, if you search 2025 Dynamics GP 2025 year-end blog, you will find this blog post with all her steps and all the everything that's out there. And the same thing, Dynamics GP 2025 year-end update, you'll get to this blog as well. I always just personally, when I'm searching for anything, put Dynamics GP in front of it because otherwise it gets confused with the Dynamics 365 and all the other stuff that's out there. And again, a reminder, always make sure you make backups before closing any module. Same as I noted before, if I'm going to close AP, AR, and GL all at once, I probably only need one backup before I close those three modules. If I'm going to close AP on Tuesday and AR on Wednesday and GL on Thursday, I want to do a backup before each of those closings because if I need to roll back, I need to be able to roll back easily. All users should be out of the GP company when a year is being closed. Again, company is an option. I would say out of GP completely, just because if somebody does toggle into that company and try and do some transactions while you're closing, it can be a bit of a booger to fix. Don't update your payroll tax tables now. Wait until you've completed all of your 2025 payrolls. You don't want to accidentally calculate a 2025 payroll using 2026 tax rates. And like I mentioned, double check all of those posting types of your GL accounts because that gets 1 out of 4 people every year. And with that, let me see if I can unmute all of you guys. Yes. So if there are any questions, feel free to ask the questions. Josh, like I said, I'll check and see if the recording will be available. We normally put it out on our YouTube channel. Anyone else have any questions? Okay, well, if you end up having a question about some of the processes we've covered or you need help with any of those, just email support@ingevity.com. If you are interested in the GP health check I mentioned, you can email me, which is just wepperson@ingevity.com. And I'll give you 15 minutes of your day back. You guys have a lovely afternoon and have a great holiday season.